Welcome back to Trading 360. I'm Nicole Pedalides. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Kenny Polcari is here, Senior Market Strategist, Slatestone Wealth. I'm so glad you're here, Kenny, in person, live at the New York Stock Exchange to take a look at those charts up on the big board that just keep heading south.
Yeah, yes, they do.
Some of your thoughts here, because let's say the year to date, the S&P's down 5%, this 1 month down over 7%, and the Nasdaq's worse. Your thoughts?
It's uncomfortable, for sure, but I don't think anyone's really surprised, right? We've been talking about this, like you said on your with your prior guest. We've been talking about the market has to pull back at some point. When it does, it's uncomfortable, especially when it happens at the speed at which it's happening. And we've seen it kind of, speed up almost daily, right? Today we've broken yesterday's lows at 55.66, which just suggests to me that there's more to go on the downside. But I don't think, unlike the prior guest, he's looking down at 5,400. I think 54 is a little bit aggressive, unless, of course, it all starts to come apart at the seams. I'm more right here between 55 and 55.50 and 5,500. In there, I think is a place you could at least start to put more money to work as a long-term investor. Mm-hmm. As a trader, look, you could trade in and out at any time you want because that's what you do. You're trading. But if you're looking to allocate money as an investor, I think now's a good place to start to just kind of put more money to work.
All right.
But I'm not surprised to see us, this continued weakness, as long as the headlines continue to be as anxious as they are.
And the headlines today were the doubling down on the tariffs of aluminum and steel from Canada, and that pressured the market to take another leg down.
And it's the way that he does it, right? He comes out, he puts it on Truth Social as if that's the new way to communicate with the world, whether it's Twitter, Truth Social, whatever. That seems to be what they're all doing. I mean, Zelensky does it. He does it. Canada does it. Everybody's going to social media to make their announcements, which only makes it more anxious.
All right, Kenny, let's take a look here. You said you're picking names, and you have somewhat of a theme here today. You're not running after the Mag 7.
No.
What are you doing here today?
So I want to be stable, and they're kind of big and they're boring, but they're great stocks to have in your portfolio because they're defensive and they're good dividend payers, but there's nothing sexy about them. So start with Coca-Cola, right? It's a dividend king. It has about a 3% payout. They've been raising their dividends 62 years in a row. They've got pricing power, as we saw in their last earnings report. Their earnings are good year over year, and so there is a growth story there. So while it's it's big and boring, it's not going to be up 50 or 100%. It is a name that's going to do well, and right now it's kind of teasing a level where it's going to break out. Right, it's at 73 and a quarter is kind of that level. If you draw the trend line, you'll see, and Rick will show us that. But if it breaks out above that, then I think it has a shot to trade closer to 80 as money will pile into it, especially if the market gets nervous and people want equity exposure.
All right. Let's take a look at this chart, please. He did like some of the facts that, the dividend payer, more of a defensive play. Some of your thoughts on the chart, Rick?
Yes, and maybe it's a little bit more exciting than it seemed for this defensive consumer staple type of name here, because we did have a pretty notable swing downward from these highs near 73.53, this kind of U-shaped recovery that we saw, kind of a cup and handle type of shape. I'm not saying that's what happened exactly, just this gradual bottoming out and then a resurgence up to the previous highs. So you can see that just yesterday we tested those old highs. Our old high close there was 73.01. Intraday basis, we peaked our head above it, but did not quite manage to hold on there, but still holding up a lot better than some of the other names in this market. If we were to look a little bit lower, perhaps about here, it lines up with our trend line. It's our green line. That's kind of a high and low point that's been repeated. Just a general level near about 70 seemed to stick out. We've also got our yellow 21-day exponential moving average just below that. These moving averages are typically regarded as support during uptrends and resistance during downtrends, potentially. So if we were to look also at our RSI, we can see that we have slid a little bit to the downside, some small amount of divergence there, perhaps as price made new highs, RSI started to wane, but still in the bullish territory. If we were to look at our volume profile and standard deviation channel studies, we can see that we are quite close to a heavy volume area right here near 71, 72. If we were to break above, we'd have to retest those old highs once again. To the downside, the next smaller node comes in around that same level I mentioned previously, near about 70 to 69. So some extra emphasis there.
Okay, thank you for that. Any final thoughts here on Coca-Cola?
I love the fact that he thinks it's an exciting story, because
Yeah.
I do, and I think especially in a nervous market, it's a place to put some money.
Yeah, and I saw some headlines that Trump may shortly be declaring a national emergency on electricity. We're going to have to sort of take all these blows one after another. I mean, let's see what the market does next. We are not at the lows on the Dow right now. Next up, Medtronic, right? Is that what you have next?
Medtronic, yep. It's in the healthcare sector. Again, it's not a sexy name, right? But it is a leader. Pacemakers, insulin pumps. I mean, people in need that. It's not going away. Again, it's a dividend aristocrat. 50 years in a row of raising their dividend. Now yields a little bit better than 3%. Their earnings report, it's got a great growth story. It's also they've also got $5.3 billion in free cash flow, enough to support their dividend plus their stock buyback. It's not dirt cheap, but it is cheaper than the market. It trades at about 17 times. The market at the moment maybe is trading about 23 times. So it is cheaper than the market, and it's again, it's a solid name, not sexy, but it's a solid name in a space that I think as the population grows older, I'm at the end of that baby boom generation. I'm probably in that population group that we're talking about. I think it's a name that. And look, again, Rick will show it on the chart. It's trying to test that upper resistance trend line, and I think if it breaks out there, then we could be looking at a jump up to the 115 range.
Yeah, and look, it wasn't that long ago. It hit a high of 96, and you did have Citi come out with a 107 target just recently as well on the 4th of March. So let's see. Take a look at the technicals, please, Rick.
One chart that's potentially breaking out with a move to the upside here. So we can see, if we were to backtrack a little bit, this area right around here after we had this rather sharp rally, and then we had earnings that made the situation increase even further here. This is around where price tended to close. We did have some closes beyond that level, but they were quickly reduced to a price below that previous level, near about 91. So that green line was a general area to keep in mind here. Also fairly close to our yellow 21-day exponential moving average. So in this case, price is making new highs as of yesterday. We had new intraday 52-week highs, and we are above our moving averages. They're all trending upward. They all seem to be diverging farther apart from each other, which suggests potential trend acceleration. RSI maybe not exactly cooperating here. We do have a downward sloping trend line in play. We do have a small amount of bearish divergence once again here. But if price were to push above and manage to close beyond those new highs, look for that red trend line to be invalidated as well for a further bullish clue. If we were to add our other studies once again here, we can see that volume profile helps us flesh out our key trading areas to keep an eye on here. So this is the area that sticks out. It coincides with our trend line, our blue line, which is our linear regression line, our line of best fit based on closing prices, which is kind of an idea of fair value. And also quite close is our orange 63-day EMA. So all around 89 to 90, there's quite a bit of potential support to consider. If we were to keep moving to the upside beyond our old highs there, our orange line, our +2 standard deviation channel, 2 standard deviations above our linear regression line, comes in presently around 98.30. So one area to consider if we do get that upside breakout.
And it's good to take a look. Thank you for that, Rick. Take a look at healthcare, right?
Yes.
I mean, you're really mixing it up here, trying to pick different sectors.
Right, and I think healthcare is going to be a beneficiary. Again, in a nervous market, healthcare is, everyone needs healthcare. You need it whether the economy is good or bad.
Right.
So it's a space that people should be, at least have some exposure to and paying attention.
All right, last but not least, LHX, L3 Harris. Easy for me to say, right?
Right.
So tell me a little bit about why you picked this one
Well,
today.
now it's in the aerospace and defense space, right? And in all this chaos, this geopolitical chaos, whether it's Russia, Ukraine, whether it's China and the potential Taiwan-China conversation that we're having, I think, again, it's a place where you need some exposure, especially kind of where we are at the moment, right? But this also has a good story, right? They've got $34 billion worth of backlogs, right? So that's locked in. That's locked in revenue. Its earnings story was very positive when it came out in January. Their growth rate, they came out at 347. They beat the estimates. Revenue's up 5%. They've got a bunch of the different sectors, segments of their business, all doing well. It also trades below market, right? So it's trading about 18 times. Again, the S&P is trading where? 23 times. So in that sense, it is a bargain to the overall broader market. And it's in a space that I want exposure to in terms of aerospace and defense. Now, look, if you look at it on the chart, Rick's going to show you, it's had a nice swoon. It kind of traded there at the bottom, and it's starting to lift its head. It's right at trend line resistance now, where I think if it breaks out, then we have a shot to see it rally again.
Right. I was thinking, as I was saying it out loud, the LHX. I don't know that I've ever said it out loud.
Right.
So I always think of LLL.
Right, correct.
Right, it used to be Triple L.
Triple L.
Yeah, exactly.
Right.
So we have our nicknames for things down here. So, I had to think twice saying it out loud.
L3 Harris.
Rick, let's see the technicals, please.
Yeah, this is one that's had some name changes too, so it's a little bit more confusing to talk about like this one. But when we look at the chart here, what we see is that we have trended downward for a while off of those highs, 265.74, connecting these subsequent highs from our decline here. And you'll note that I have these shaded areas on the chart here. They match up with our volume profile areas. And you can really see, though, that these are areas where price has frequently gotten stuck in the past. Right around here, we had a great deal of difficulty clearing this area. Then when we eventually did, it became supportive several times here, and then it came back into focus recently when we had the end of last year, the beginning of this current year, and also just yesterday too. So around 222 and around 210 or so are the general areas to consider here. In terms of our other indicators, though, we're kind of smack in the middle of all of our moving averages. We have our purple 252-day to the upside, our yellow 21-day to the downside, and the battle today seems to be for our orange 63-day EMA, which comes in right around 214. So keep an eye on whether we close above or below this potentially noteworthy level here. RSI also interrupted. Green trend line has been broken. Our price trend line, our shorter term white trend line, hasn't completely snapped yet here, so keep an eye out to see if we get confirmatory breakdowns both in price and RSI here. So as you can see now, our shaded areas match up with our volume areas. Right where we're at about now is our point of control, our area of heaviest trading of all. It's also the site of our -1 channel. So right where we are around 210 or so, 215, a key area to hold.
Yeah, and look, it came from that 265 all the way down to the 193. So great charts, and you show the heavy trading that happens in between there.
Right.
So you think that this does have some upside?
Well, I think it has upside. But look, if the overall tone in the market continues to be negative and they keep pushing the market low, then everything's going to get hit. But these will get hit less, in my opinion.
Right.
And then if the market starts to turn, these will benefit first.
Okay. Kenny Polcari, great to see you of Sleetstone Wealth.
Always
our
a
own
pleasure.
Rick Ducat there on the charts doing the technical analysis on the big three. Thank you both so much. We looked at Coca-Cola, Medtronic, and L3 Harris.